understand the fair value gap. So what is fair value gap? So fair value gap is a three candle pattern with gap between first candle's high or low and third candle's low and low or high respectively. So the first candle could be anything. It could be consolidation or an expansion candle. In other terms, consolidate it could be a respect candle or disrespect candle. Second candle is always an expansion candle, which is nothing but disrespect candle. Third candle again could be consolidation or expansion or respect or disrespect candle. So in a bullish scenario, for a bullish fair value gap to be created, we have first candle which could be anything. Then second candle is an expansion candle. Expansion candle will have its close above the first candle's high. That is a requirement for an expansion candle. Then third candle will have its close below the expansion candle's high. Then if there is a gap between the first candle high and third candle's low, it is called as fair value gap in case of bullish fair value gap. In a bearish scenario, we have first candle which could be anything, respect or disrespect candle, consolidation or expansion candle. Second candle will be an expansion candle, bearish expansion candle or bearish disrespect candle whose low is closing is below the first candle's low with the requirement for expansion or disrespect candle. Third candle is again could be anything, expansion or consolidation, respect or disrespect. Only requirement for third candle is its close is above the expansion candle low. In this case, it is called as a bearish fair value gap. Let's understand different candles that are part of fair value gap. So first candle is expansion or consolidation. It could be respect, disrespect or indecision candles. Second candle is always an expansion candle, which is nothing but a disrespect candle. Third candle again could be any type of candle, disrespect, respect or indecision, in other terms a doji candle. So types of fair value gap. How many types? It's a normal fair value gap wherein third candle closes below or above the expansion candle high or low. Another break is fair breakaway gap, and third type is overlapping gap. We will see each one of them in detail in the next slides. So what is fair value gap? A normal fair value gap. This is a normal fair value gap wherein third candle is closing below the second expansion candle high for bearish fair value gap, for bullish fair value gap, and for bearish fair value gap, third candle is closing above the expansion candle low. So this is a normal fair value gap. Let's see what is breakaway fair value gap. So in this case, the third candle is also an expansion candle. Expansion candle means the third candle's close is above the second candle or the expansion candle's high. So it creates a breakaway gap. Similarly, for bearish case, we have third candle whose close is below the expansion candle low. So this closing is below this expansion candle low. So it is called as a breakaway gap. So the momentum in price is so much high that price, instead of consolidating, price expands, keep on expanding, keep on increasing or decreasing. So it creates a fair value gap. It shows that there is a very high momentum in price. Let's see third type of candle, which is a special type of fair value gap where there is an order block or a swing high which is overlapping with this normal or the breakaway gap. So this particular swing high is directly overlapping with our fair value gap. So in a bullish scenario, this is the overlapping gap. In a bearish scenario, there could be a swing low which is overlapping with our fair value gap. So it is called as an overlapping gap. This is a high probability fair value gap wherein we have an order block overlapping with a fair value gap. We'll see how it is high probability as compared to normal or breakaway in coming session. There is special type of fair value gap pattern which is called as a sharp turn. It is a very powerful reversal pattern wherein we have a bullish fair value gap followed by bearish fair value gap. These fair value gaps need not be overlapping. It could be at different prices. So this fair value gap could be at lower or at higher location, or this bullish fair value gap could be at lower or this higher location. Thing is that when price reaches some PD array, it reverses the direction and creates a bearish fair value gap overlapping with bullish fair value gap. So what is this? So if you see such a sharp turn on any time frame, it's a if you go to higher time frame, it is converted into a respect candle. So on the lower time frame, sharp turn is higher time frame respect candle, respecting the higher time frame PDR. Why FVG matter? So the creation, what is fair value gap? It's a gap in the prices. So it shows a momentum in price action. What FVG leaves behind? It's an imbalance in buy and sell orders, or there are some pending orders in the fair value gap. Normal FVG has higher probability of being respected before price continues in the original direction. What exactly this means, we'll see in the charts in the coming slides. Once price reverses, breakaway gap or overlapping gap acts as a resistance to the price. This also is a little advanced. We will see in the coming slides. So when we say FVG is being respected, what exactly it is? So we have this fair value gap. After consolidation, price comes down and again continues in the original direction. So this particular candle is having higher wick as compared to the body. So it's a respect candle. So what is it respecting? It is respecting this fair value gap, right? So this is an USD 4-hour fair value gap. Same fair value gap when we go on 15-minute time frame is this, wherein we are this green candle or this respect candle is here with a sharp turn. So the sharp turn on lower time frame convert is nothing but a respect candle on the higher time frame, right? So this is a fair value gap. There was a high momentum in price which created this fair value gap, which was visited later on with the sharp turn and price continued in the original direction. What original direction? The bullish direction. So this is how fair value gaps are in the price action and how we can use them to our advantage. We'll see in the coming section. So this is a fair value gap created on Tuesday, 27th May 2025 at 4 a.m. UTC. You can cross check it and understand it yourself. Gold month. So let's understand candle science from this chart. So we are looking at month of March. What type of candle is it? So it's a disrespect. What is it disrespect? It is disrespecting the last month swing high or last candle, previous candle. So it is disrespected and price is moving up. If it respects swing high, that means price will close below this swing high and will reverse the direction. That is how we respect some PDR. PDRs, there are only multiple PDRs like fair value gap, swing high, swing low, previous candle high, previous candle low. These are the most important PDRs that we'll be using throughout our videos. Let's see the same month of March week time frame for gold. So what happened? So that disrespect candle, it was disrespecting the February week swing high or February high. How? So in disrespect candle, we have this fair value gap, a weekly fair value gap, which is a breakaway fair value. Why is it breakaway fair value gap? Because the third candle close is above the second candle or expansion candle high. So this is a breakaway gap, right? Let's move on to day time frame. So what happens in the daily time frame? So that weekly time frame or the breakaway gap is having multiple daily fair value gaps, namely four fair value or five fair value gaps. So this fair value gap, this fair value gap, this fair value gap, this fair value, this fair value. So we need to mark all the fair value gaps to understand the flow of price action. So in the month of March, we had this first fair value gap, wherein the third candle closed below the expansion candle high. Then we continued our bullish journey to create another fair value gap, which got visited, respected, and we continued our bullish journey. After creating these two fair value gaps, we are now returning back to our original or the first fair value gap, which is being respected, and then price is again continuing in the original direction, which is the bullish direction. So this is how fair value gaps are do get visited before continuing the journey. So this retrace or this pull back into a fair value gap is what we wait for before we take a trade. That is how fair value gaps can be used. How exactly? When we'll see in coming videos. For now, we will just understand the candle signs, price action, fair value gaps, fair value areas. In the next video, we will understand fair value areas. Let's continue. Video. So we learned about fair value gaps. So this is a disrespect candle. What this disrespect candle on the monthly time frame tells us? It tells us that on the lower time frame, like weekly and daily, we had series of fair value gaps created and value price expanded from low to high. So this is a disrespect candle that we understood in the first video. Next, we have a disrespect candle from the month. So disrespect candle, what it shows, what it tells us, that on the lower time frame, week or daily, we had series of fair value gaps respecting some PDRA. It could be a previous swing high or a fair value area or fair value gap, and we had fair value gaps in the reverse direction. So there were many fair value gaps overlapping over each other. So price expanded and then reversed respecting a PDR. That is called as a respect candle on the higher time frame. So with this we conclude fair value gaps. So how fair value gaps can be marked on the price chart, what they show, what they tells us about the price action.